Hi everyone, welcome to the Composite Man channel. In today's video, I'm going to talk about a very important topic, which is how the money in your bank account is not safe. Sounds crazy, right? You keep your money in the bank for it to be safe. You don't want cash to hang around the house. Somebody can come and steal it. You can lose it. So you keep it in the bank. As safe as it can get. That's what it sounds like. But the truth is that it's far from being the reality. The money in your bank account might not get stolen right away, or, of course, there are different type of scams going on today where it actually can happen. But let's say that you know how to keep your money safe in the bank account. You won't lose the password. Nobody's going to scam you. You're going to lose in a different way. Every year that goes by, because of inflation and the fact that governments are printing more and more of their currency, in this case, you can see the price chart of purchasing power of the US dollar, what happens is the purchasing power of the currency simply declines until it's almost non-existent. So you can see the last 100 years of the US dollars, the purchasing power just went down 99%. It's absurd how much it went down. So you're only left with one solution. Invest in different assets that can increase over time instead of having all of your money in a bank account that it doesn't provide any yield. And if it does provide a yield and you put it in a savings account and get like 3 to 4% a year, that's nothing. That's less than reported inflation in most cases. And you want to be able to really grow your wealth or have any bright future using the method of just saving the money in the bank. So what I want to show right now, and it's pretty amazing to show it, most people, when they come to the realization that they have to invest in something, and it can be anything, I'm about to show some examples, they simply say, well, I don't know what to invest in, and then they just stop. They say, well, I'm not familiar with this type of investments. I'll just keep the money in the bank. But the truth is, almost any like basic investment that they would have invested in the last 5 to 10 years would have made great, amazing returns, more than they would have expected. And let me just show you a few examples of how big the returns are and how blindly you could have just chosen an asset that you believe in and is considered safe and thrive. So first asset that I want to go over is the housing market. So you can see the house price index since 1975. And as you can see, it just goes up and up and up. Of course, there are different years or periods. For example, here, 2022, you can see we went down a little bit. But if you keep waiting and if you don't sell, then you're going to be in massive profit after a long time. So this is the 5 years chart, but we can look at the 10-year, 20-year, and 30-year chart, and we can see there are periods like 2008, the great financial crash. That was a bad time to buy houses, but let's say you bought a house here and you sold it here. That's losing all the gains. When you're investing in assets that are considered safe, and we're going to go over a few more in a second, you must dollar cost average, which is a type of investing method where you just keep buying from the same asset. Now here we have a house. It's not possible to dollar cost average into a house, but if you just don't sell and you understand how the market works and that things keep going up, of course, there are certain areas in different places in the world that I'm sure they're worth less than what they was 10 years ago. But as long as we're speaking in general about real estate in the United States, then yes, it's going up, and it's going to probably continue to go up in the next 10, 20, 30, 40 years. Now let's look at a different asset, gold, the oldest asset that there is. If you look at the 5 years chart, you can see 170% gains. Of course, that's amazing gains, and it could have also been much less, but those are the last 5 years. Now, if you look at the maximum, you can see that every time there was a dip, let's say 2011, we went down for a very, very long time. It was in accumulation zone for like 10 years. But if you was patient enough, if you kept accumulating in the bottom and kept dollar cost averaging into assets you believe in, like gold, then you are in massive profit right now. Let's go over silver. With silver, it's even a bigger period of doing nothing, because it peaked in 2011, almost like $50. There was a very big manipulation doing with silver's price. And then we can see a very large accumulation time zone that, again, it's more than 10 years, like 12 years. But if you kept investing and believing in the long term of this asset, which is considered a big, safer type of asset, then you are in profit. If you go over the S&P 500, we can see that for the last 5 years, 70% profit. That's massive. And if you look at the maximum time, every time there was a dip, it was an opportunity to accumulate. And again, these opportunities can take years. It can be 5, 10 years where you're not in profit, but that's how long-term investing works. You're not only looking to make a big profit tomorrow. You're looking at the long term of the asset. So the S&P 500, again, this is considered like the basic investment that if you ask like any, investment broker, he would tell you, yeah, the S&P 500, that's the basic thing that, almost anyone should invest in. Top 500 companies in the US stock market. So you can see massive profits. MSCI ACWI, this is even a larger index that has US companies and also companies from all over the world. So it's even considered like more spread out than the S&P 500. And also here we can see massive profits every single dip. Like here with the pandemic that we had in 2020, we can see massive opportunity to buy at very low prices. You would have 3x your money just buying at the bottom here, almost 3x. And let's look at a more dangerous asset like Bitcoin, for example. In the last 5 years, Bitcoin didn't do so well compared to gold and silver and S&P 500 and other assets. But if you look at the maximum time, you can see there were different dips that were an amazing opportunity to buy. We are also experiencing some sort of dip right now. So, the last 5 years wasn't so bright, but again, if you look at the maximum times, it's absurd and massive gains can be done. Now, any type of asset that you've seen until now, it can be a house, it can be gold, silver, S&P 500, other indexes that are considered safe. I could have also shown the NASDAQ, Russell 2000, any type of index. You would have made extreme amount of gains and money. You just need to pick, you can spread it across 5 different assets. You can invest in one safe assets, quote unquote, like the S&P 500, but you got to do something. If you don't do anything, you lose for sure. Now, there's another important point I want to show about specific stocks, because you can also say, okay, I want to invest in a large, safe, let's say, company like Apple. Apple is a great company. If you see in the last 5 years, it gave very good gains, and in the maximum amount of time that it existed, of course, it's a massive success. But when you choose individual stocks, you can either win. Let's see another example, NVIDIA. The last 5 years have been crazy for NVIDIA, and not even talking about the maximum amount of time. It just goes vertical since it's so crazy. But it can also go the other way. So we have successful stocks like Apple, NVIDIA, Amazon, which you could have invested 5 to 10 years ago and could see that they're going to be much larger in the future. But a lot of the times you can look at companies which are very successful at a point, but you don't know and realize that it is the peak. So let's say, for example, BlackBerry. Look at the last 5 years. They are in the negative almost 45%. If you look at the maximum time, you can see that was the peak, 2008. Let's say we are here right now. It's 2007, 2008. BlackBerry is a great company, everyone using BlackBerry phones, but you have no idea that you're about to experience the biggest shift in the market and other companies are going to take over. So right now, the way we're looking at NVIDIA, Apple, all these companies, you never know if you are here right now or if you're somewhere safe. And another example for it is Nokia stock. In the 5 years, you can see it provided massive gains. But if you invested over 10, 20 years ago, you're big in the red. And like I said, you never know if you are here or somewhere else. And that was a very big company. Everyone was using Nokia phones. So you never know what can happen. But the thing is, if you don't take on massive risk and don't invest in individual stocks and assets, and you go stick to indexes like the S&P 500, like MSCI World, like the NASDAQ, like gold, silver, and even Bitcoin for that extent, which is like his own category right now. And I think everyone should own just a little bit. So as you can see, everyone is making money. The only people who are not making money are the ones who don't invest in anything and just lose their purchasing value from year to year. So I hope this video has been helpful for you guys, and I would really appreciate it if you can subscribe, like, comment on the video, and I will post a lot more very soon. Thank you.